Guys, welcome to the Startup Tank, live on the first shot. That's always a good start. I'm your host, Matt Ward, host here at the Startup Tank Climate Investor Pitch Show and founder of Forward VC, our early stage climate syndicate investing in breakthrough climate companies that move the world forward. We've got some interesting news to share with you guys. Unfortunately, if you're not accredited, we can't share that. So you have to go to forward.vc/syndicate if you want to learn a little bit more about us and what we do. But this year, this is the Startup Tank. Every 2 weeks, we feature some of the world's top climate companies, the ones that are changing the world, but also building venture scale returns in the process. And today I'm joined on the panel by two incredible panelists. I'll give them a chance to introduce themselves in a second, but first we got to say thanks to our show sponsor, Leva. So Leva is the fastest, easiest way to set up an SPV. Their digital SPV platform allows you within minutes to have an SPV of 5 or 500,000 people set up to deploy capital quickly and easily. No lawyers, headaches, paperwork required. Fast, easy, simple secondaries and follow on for your SPV, which is super relevant for us with Forward VC because that's what we do. We invest via syndicates in some of the most promising companies. We may or may not be investing in companies that you see today, and nothing that you see should be construed as investment advice, of course. So now the Startup Tank, how does it work? Each of the startups who come here today have been carefully screened for really potential on venture scale returns. These are the companies that can go 50, 100, 1,000x, change the world while building incredibly innovative climate solutions and climate companies in the process. Looks like I forgot to click the record button, so I'm going to click that now. And if you're listening to the audio version, that means you missed this little introduction. But speaking of introductions, I want to bring in our investor panelists now. I'm joined by two phenomenal investors here. Matt McGraw with Anthro Ventures, who we're actually co-investing in a company now with, and Ben Hogg with OGCI, the Oil and Gas Climate Investments Initiative. Ben, do you want to share a little bit more about yourself, about OGCI, what you guys do before we jump into things?
Sure, happy to. So just briefly about myself, my background is in the chemical industry space where I had some M&A activity and then transitioned towards climate investments. And climate investments is basically the actionable investment arm of OGCI, the Oil and Gas Climate Initiative. So members, oil and gas majors, and we focus on innovative technologies that mitigate greenhouse gases in general.
And Matt, a little bit more about Anthro and what you guys are building?
Sure. I'm Matt McGraw, the general partner founder of Anthropocene Ventures. We invest in pre-seed and seed stage companies that leverage deep science. We only do real hard stuff to affect climate change, climate writ large, not just greenhouse gas and renewables, but things like water and what we call hipster verticals. But I'm not a traditional VC. I'm a founder. I'm a 3x successful founder and retired and got dragged back into this by my partner, Jim Betcher, who is a blue-blooded VC investor who's been in the game for about 40 years. My wife is a climate scientist that also, she was pushing me and Jim was pulling me into the industry. We launched in January. We've made a dozen investments or so, and we co-invest alongside like Lower Carbon and Breakthrough, who are good friends of ours and we share LPs with. And that's me.
And at Forward VC, we run a climate syndicate investing in pre-seed and seed stage climate companies in Europe, Israel, and North America that have, we like to say, crazy, ambitious founders tackling real big, real world problems. So for us, a carbon accounting software or a carbon marketplace doesn't cut it. We do like to see, doesn't have to be hardware, but it has to be solving real hard problems in the world. So we align pretty strongly with Anthro there and have some things in the works. If you're part of the syndicate that's watching now, then you know what I'm talking about. And if not, you can find out more at forward.vc/the syndicate if you're an accredited investor. But now I want to move things on with the program. So the Startup Tank, how it works. Six of the top climate companies today, they come on every 2 weeks. They have 5 minutes to pitch, our investor panelists, our sharks, so to speak. And at the end of the pitch, we'll have live Q&A with the companies, get a little deeper into what they're doing, try to set up some follow-on meetings for funding later on. And at the end of the night, we'll choose our panelists. We'll see if we can come to a consensus on the climate startup of the night. That's the agenda that we have planned for you guys today, and we have 6 incredible companies presenting. We have people coming at things from the food tech and alternative dairy space, revolutionizing plastic recycling. Speaking of plastics, how about plant-based plastics and decarbonization? We have proof of payment for transparent nature restoration, better battery testing, and a better way to manage battery charging stations. Now, is everybody ready to jump into the tank? I'll take that. I will take that as a yes. I will get our clock started. And first up, I'm going to hand things over to Alex Blum and Applied Bioplastics, a company that we're very, very excited about, to kick things off.
How's it going, Matt? Thanks for having me. Can you see my screen?
Yep.
Matt appears to be muted here.
You are good to go. Sorry about the muting. I will start the clock and you have 5 minutes to knock it out of the park. Sound good?
Yep. Thanks so much. Hi, everyone. I'm Alex Blum. I am the co-founder and chief impact officer of Applied Bioplastics. So at Applied Bioplastics, we are decarbonizing the plastic industry and changing the future of polymers. So plastic is essential to modern society, and despite many efforts to reduce, reuse, and recycle, humans are using more plastic than ever before. Now, we're not talking necessarily about low-density polyethylene grocery bags, to-go cups, things that 200,000 years of human history was fine without. We're talking about the things that have driven the economy today: toys, tools, technologies, transportation, these things that have gotten cheaper and lighter and more accessible to more people. That is the demand that's driving this growth in the plastics market. And these are plastics that humanity needs. Now, besides the obvious trash problem with the single-use plastics I mentioned before, the major downside of all this durable plastic that I just talked about is that it currently accounts for about 7% of annual carbon emissions. And this is expected to grow to 20% by 2050. Now, again, there are efforts to temper this demand through reuse and recycling, and I'm so glad to hear that there's a plastic recycling technology with us here today, as well as plant-based alternatives. Unfortunately, these are limited primarily to packaging, which leaves 2/3 of the market virtually untouched. So how do we improve the sustainability of the durable plastic items, the items in black here, that these efforts don't address, like containers and furniture, appliance housings, building material, transportation components? Well, at Applied Bioplastics, we have commercialized a platform technology that allows us to produce durable biocomposites that are mechanically identical to the plastic they're replacing, which enables their use in standard manufacturing processes. This means that there's no cost to adopt for both the people who make plastic and the people who use plastic. So we've been through several internal and external plastic molding trials, and we now know with certainty that our plastics work in a wide variety of applications. About 80% of all of the applications for polypropylene, which is the world's most used plastic, we're working on a polyethylene that we expect to release later this year, and we're targeting about 80% of the use cases of polyethylene in durable applications. Now, how have we done this? Essentially, our durable polymers incorporate sustainable plant fibers that are available all over the world, which reduces their net carbon emissions compared to the incumbents. Because both the plant fiber and our proprietary processing technology are inexpensive, we can actually win today against the big petrochemical players on price. That's not something any other alternative plastics maker has been able to do thus far. Also, obviously, we're slashing those carbon emissions for hundreds of thousands of products. As I mentioned earlier, our solution is easy to adopt for both companies that produce and companies that use plastics, because we built our technology around the existing production, so there's no cost to adopt on either end. Now, we are the hottest brand in composites, which does help us hire. We've won every industry award we've entered in the last 2 years, and the last time I put out a job break, I got 1,400 applications in the first 48 hours. This competition slide here is interesting because we don't necessarily see the rest of the market as competition. We see them as potential partners. So, with regard to the general petrochemical plastics, the virgin resins that you see on the market today, we can make those cheaper and greener. For the specialty petrochemical plastics, the current composites, other things like that, again, by using our carbon negative additive or co-feedstock, we can make those cheaper and greener. And for the nascent and costly alternative bioplastics, the total conversion of biomass plastics, the ones that, they're 300 to 500% the cost of commodity plastic today, but are much greener and don't use oil, we can actually also make those cheaper and greener. We are compatible with bio-based plastics as well. So we're relevant to the entire plastics market, and we can make everybody cheaper and greener. As I mentioned earlier, we've won a ton of awards. I'm just going to skip through this here to get to our pipeline, which is really important here. So we've built a sales pipeline for our thermoplastic product that contains nearly 40 global brands with multiple paid pilots underway with some of the largest manufacturers in the world, including nascent partnerships with several petrochemical suppliers. We've advanced $90 million of our $400 million pipeline into the paid pilot phase. And it should be obvious why we're seeing so much traction after only 3 years of work. Number one, we have a solution that meets every need of the current market while solving an issue that is top of mind for nearly every major manufacturer. And number two, we've taken away the cost of adoption, the barriers to scale, the limited feedstocks required by specialty plastic producers, and the cost difference between alternatives and the incumbents at a time when most manufacturers are making public commitments to reduce their environmental footprint. Guys, we do have a tiger by the tail, but we need your help to put it in a headline. We're currently raising in order to get to signed commitments from several of our prospects. We have 38 immediately seizable opportunities that span industry and manufacturing. Now, of course, this is a complex handshake type of sale. And while we recently poached an amazing head of sales from a major petrochemical player, we need to hire the rest of her department.
Gong. You said you wanted a gong, right? I'll give you a gong.
All right, 5 seconds. We're changing the future of plastics. And if you are interested in joining us, I want you to reach out, join us and see how sustainable plastic can be.
Let's see how sustainable plastic can be. Alex, thanks for sharing. Thanks for what you guys are doing. I find the entire business, as you know, fascinating. I'm going to bring in our other investor panelists. I've certainly got questions, but first, I think I should hand things over to Ben with OGCI, since this is right up his alley. Ben, do you want to kick things off?
Yeah, I saw one logo of one of our LPs was there, Total. But there's genuine interest anyway also to decarbonize. So I can echo your comments definitely in that. Now, I'd be curious how you see it's a very complex value chain that you operate in. How are you planning to participate in that and enter the market, and B, also, and obviously extract the value appropriately, and what business model you be running on? So I might have missed that, but
certainly,
if you could elaborate.
Yeah, I mean, the business model is complex, which is why I leave it out of the pitch. It would take me all 5 minutes to get through the business model. But in short, today, we are selling our plastics directly to manufacturers. We have our compounding partners. In some cases, we even have our injection molding partners who are making those parts for the brand manufacturer. We're doing this because we need to prove that our material actually works, right? They can't walk up to Exxon and say, "Hey guys, pay me hundreds of millions of dollars to use my technology," with absolutely no customers that I'm bringing to you, right? So we're going elephant hunting. We're working with some of the largest manufacturers in the world, some of the largest users of polypropylene in the world. As I mentioned during the pitch, we have got a ton of traction with those guys. Some of the like literally the largest CPG company in the world. I'm not going to say their name because I have an NDA, but they paid us to test our plastic, right? And a substantial deal of money have given us nearly a year and a half of their resources to work through and find exactly the plastic mixture that works for them, right? So, we're really optimistic about where we're going on the direct sales approach. We're also working on channel sales. We have 2 distributorship contracts that we are hoping to have closed by the end of next month. And then lastly, licensing, right? So our technology is extremely lightweight. As I mentioned, you don't need to change your machines to use our plastic. There's no process difference. And for our part, what we're able to do, and this is going to pre-answer another question, so I'm going to take a little bit of extra time here. Where do you get the fiber? What kind of fiber is it? Cool thing is we can use waste fiber. We can use farmed fiber. We can use fiber that was dedicated to remediating brownfields, industrial sites and things like that. So all of these things are things that we can encompass into our feedstock. And the way that we do that is we have small, lightweight fiber treatment centers that are close to the source of the fiber. You don't want to be shipping low bulk density plant fiber internationally. That would betray, not only our cost advantage as well as our carbon advantage, right? You're putting a bunch of loose fibers on a shipping container. That's not going to work, right? So we treat and densify the fiber on site or very close to where it's being grown. And then we ship it to our compounder. Now, that compounder can be one of our partners, or more importantly, it can be one of the partners of our customer or our licensee, right? So that's where we kind of fit into the value chain, is just above the compounder. And for companies that want to get greener, whether they are a brand manufacturer or a feedstock manufacturer, a lot of the time they're selling compounded plastic, right? So the folks that sell compounded plastic would license from us. The folks that buy compounded plastic would buy from us. So that's the simplest way I can put our business model.
Appreciate it. And if I may, I'd like to follow up particularly on the feedstocks. So on an even comparison, if I don't know what is your beachhead market or your primary application that you're going for, but on that specifically, have you analyzed the emission footprint or the carbon intensity
Absolutely.
side by side, apples to apples, means for the whatever plastic you're going after?
Yes. So actually, one of the first assets we ever created as a business is this gigantic matrix of not only every fiber type that's possible to use with our current technology, but the local power source. So like India is going to be coal, France is going to be nuclear. I mean, where that fiber is grown and where it's being, ground down and treated and where it's being compounded all matter to the life cycle of our plastic. So we have this enormous matrix that goes through cost, CO2 cost, quality of the fiber, quantity of the fiber, quality of the energy that's being used, the sustainability of the energy that's being used. And we use that matrix to make decisions about where to put our first facilities. As I mentioned, Europe is a big target for us because of the reliance on nuclear energy in some parts of Europe. That's a great target. Natural gas isn't great, but it's certainly better than coal. So places like Texas and the central United States are also really good places for us to post up because they have that better energy, they have that access to the fiber. Now, as far as the beachhead applications and which fiber to use, we are targeting 80% of the applications of polypropylene. So we're looking very heavily into automotive, aerospace. Right? Like your car is like 80% plastic these days, and that's a good thing, right? That's why you get 40 miles to the gallon. But those take a long time, right? So we're starting out in durable consumer products and goods. That seems like that's the closest thing. So we're talking about pens and Tupperware and, Tupperware, not the brand, but you know what I mean? Like food storage sort of stuff. Any sort of household item is our beachhead. One of the advantages there is that a lot of that is injection molded in India, where our first facility is already located. So, we're able to get to both the fiber and the customers and the compounders and the injection molders all in the Maharashtra area of India. So that's where we're starting out. And that's our beachhead.
I got a follow-up question. We talked back in, I think, March or April, and we, at the fund size, we just couldn't get conviction on it, mostly because we didn't know the space well enough. And we had some other priorities we had to get to. And I really liked your company. And it seems like since then, everything has just gone gangbusters for you. I just saw your Excel spreadsheet there, and it looks like you signed a lot of contracts this month. Congrats. So my question is the other shoe. What isn't working? What are you worried about? Like right now, it just seems like everything is up and to the right.
Yeah. So, I think full adoption is where I'm concerned, right? We're getting to LOIs, we're getting to commitments, we're getting really close with a lot of these customers, but I'm a salesman by trade, right? I've been an enterprise salesman for about 10 years now. And I know that until the check is deposited and the product's on the way, it's not a done deal. Right. And so I'm concerned about that. That's what keeps me up at night is following through and executing. The other thing that I'm concerned about and why we're raising right now is I don't yet have the capacity, right? Actually, I do have the capacity, but it's through partnerships, right? So I've got compounders, I've got people who treat my fiber, but in order to protect my IP, those people who are treating my fiber, there's 3 different steps. It's 3 different companies doing it. So one guy does 1 step, then ships it to guy number 2, who does step 2, who ships it to guy number 3, who does step 3. And then finally it goes to the compounder. As you might imagine, that's really expensive. And so, we're going to be losing money on our first few shipments of plastic, which is why we're raising. If we can bring the fiber treatment process in-house, all of a sudden, not only are we able to match price with what's out there today, but have an enormous margin. I don't want to disclose the margin because it's nice, but the point is, like, we can go and healthily beat companies like Exxon and, I'm very sorry, Total, by 10%, on the cost of a commodity feedstock. We know that we can get there if we bring fiber processing in-house. So that's what keeps me up at night is, am I going to get 40 orders in the next 6 months? And like, if I do, how much money am I willing to lose? Am I going to be able to set up my internal capacity in time to serve those orders? Or am I going to have to push people off and ask them, and I'm so sorry about the lawnmower in the background here, but am I going to have to push major companies off that I've spent years working on these deals and say, I'm so sorry, I know that we've just gone through 2 years of testing with you, but I can't serve your needs for another 6 months while I'm setting up my capacity, and I just can't lose that much money, right? So bringing capital in now and pulling a very short-term Tesla where I'm losing money on my price competitive thing, right up until the revenue starts coming in. That's the other thing that keeps me up at night.
Okay, fair enough.
So is that the status of most of those contracts now? You're basically waiting either on finalization with them or them to put through orders?
No, I mean, I wouldn't characterize most of our pipeline like that. I think there's a handful of high volume deals that are in that stage. There's a bunch of other deals that we're working through, but at the same time, I don't want to say we're like sandbagging, but it behooves us to not push really hard on parts of our pipeline. Because again, I want to build some capacity, and I want the trust of investors like you guys to see my pipeline, say, look, we're going to go enable you. We're going to give you money to go make sure that you have the capacity to meet this demand that you guys have created. So I'm relying on you guys, and I'm grateful to be here. But if people are cutting checks, that's going to be really, really helpful in terms of making me sleep well at night and having the capacity to serve these customers and being able to push my pipeline forward.
How much capital do you need to hit that point where you can turn the corner?
I think about $6 million.
So a seed and then maybe a small seed plus.
Something like that. Yeah. I mean, project finance, once we start signing these contracts, I mean, like, if you guys don't want my equity, I'll go ahead and get some debt from a bank and do it that way. But, there's a couple different paths, right? And I think once we start getting like purchase orders and whatnot, we can go finance the necessary equipment if necessary. So I'm not too worried about it. I say it keeps me up at night just because, there's so many paths available at this point, and I'm just kind of running through them over and over in my head. But yeah, so about $6 million that gets us through, multiple facility setups. It enables several key hires, including filling out that sales team that I mentioned during the pitch, and pushing those deals forward to completion.
Awesome. I would love to dive even further and have some more questions, but I also want to make sure that everybody has a chance to pitch. So Alex, thanks so much for presenting Applied Bioplastics. Ben and Matt, thanks for your feedback. And I'm going to hand things over to our next our next founder of the night. We might as well stick with plastics, but hop to the recycling side of things and hand over to Josephine with Everalis. Josephine, do you want to tell us a little bit more about what you're doing to try to save the world one non-plastic bottle at a time?
Thank you, Matt. Yeah, thank you very much for the invitation and the opportunity to pitch here today. I will try to share my screen. Yeah, I think you should be able to see my slides now.
Looks great. You have 5 minutes on the clock. Let's hear about a circular plastic economy.
Thank you. Yeah, my name is Josephine Holstein, and I'm one of the founders of Everalis, and we develop enzymes for a circular plastic economy. The plastic's life cycle is far from being circular, as plastic products are still predominantly made from virgin fossil feedstocks. Each year, 353 million tons of plastic waste are generated, mainly emerging from packaging and textiles. Currently, only 9% of this waste is recycled and the rest goes to landfill or is incinerated. The main recycling approach is mechanical downcycling to lower quality products. 2% are chemical approaches, which often produce low quality oils by using large energy input, or they use toxic and expensive catalysts. A green alternative approach is the use of biocatalysts, which are also called enzymes. The biodegradation of synthetic polymers produces pure monomers, which can be recovered, purified, and repolymerized to virgin-grade materials. Enzymes are highly specific. They can work at room temperature and they can deal with mixed and soiled samples. It has been estimated that the enzymatic monomer production uses up to 83% less energy and around 0.5 gigatons less greenhouse gases are emitted in the supply chain. The whole process is scalable and can replace the use of crude oil. To establish industrial enzymatic recycling processes, the most difficult part is to find efficient enzymes. A few enzymes have been identified that can depolymerize plastics, but so far only one of them is efficient enough to be used industrially. The production of enzymes at multi-ton scale, as well as the infrastructure for enzymatic recycling processes at scale exists. We developed an ultra-high throughput screening approach to find and improve efficient enzymes for plastic depolymerization. You can find enzymes in nature or public databases. You can generate huge enzyme libraries from environmental samples, even plastic contaminated areas. Conventional methods will use low throughput methods to screen those libraries, for example, bacteria selection on plates. These methods are often time consuming and lack sensitivity. In silico-based selection methods are based on no functional data and often further assays are needed. We developed a high-speed screening approach based on microfluidics. We generate water and oil picoliter droplets where each droplet represents a reaction chamber. We generate thousands of droplets per second, so the video you can see here is slowed down 1,000 times. We screen 10 million enzymes per day, which is 1,000 times faster than any current method. With our technology, we developed a completely new PET hydrolase and improved it 5-fold. We filed the patent application for our technology and those enzymes in May this year. Our initial focus lies on the development of enzymes for the polyester PET, polyurethane pure, and polyamides PA. These plastics have a market share of 21%. In addition, they cover 90% of synthetic fibers used in textiles. They are also important in packaging, automotive, and construction. The potential market value of monomers generated from plastic waste is huge. The global waste comprises 353 million tons per year, and the value of the corresponding products that can be generated enzymatically is $248 billion. The global waste for PET, PUR, and PA is 74 million tons per year, and the value of the corresponding monomers is $92 billion. For Europe and the US alone, the PET, PUR, and PA waste is 29 million tons per year, and the monomers would be worth $38 billion. During the first 2 years, we would provide enzymes as a service to generate first revenues. Afterwards, we will sell our enzymes to customers in non-competitive areas.
You have 1 minute, just so you know.
We are also considering to develop our own biorecycling process for textile recycling. From the monomer cells, we expect to capture 20 million after 5 years and 300 million after 10 years. We are planning to raise £2 million to develop our blockbuster enzymes, set up a lab, and build out the team within the next 2 years. Currently, our team consists of 6 people with experts in chemistry, biology, microfluidic screening technologies, and protein engineering. Our CEO has more than 30 years of experience in high-tech commercialization. With this, I would like to thank you very much for your attention, and I'm happy to discuss further.
Awesome. Thanks for nailing the pitch, Josephine. You got it. 10 seconds on the clock. Very good. Very good. Let me bring in our other panelists here. I'll bring back Matt and Ben, and this time hand things over to Matt with Anthro. Matt, do you have any questions that you want to ask Josephine?
I do. A couple comments and then a question. So I love circular economy stuff. That's a big green check mark for me. I just think it makes sense. So I like your approach, and this is obviously a huge problem that you're addressing. My questions are all about go-to-market, which is a little early for you, right? Like I'm not usually asking that at pre-seed and seed stage level kind of stuff, but who are your beachhead customers? Like who do you sell to and why are they going to say yes to you? Because it's going to be disruptive to them. They're going to have to do things different. That's always hard, right? So what do you think?
Yes, so yeah, I mean, the customers eventually would be, I mean, there's different routes, but we are talking to all kinds of different people. So we talk to recycling companies, like big ones here, like General Waste recycling companies here in the UK, but we are also, as we would like to focus on the textile market first. So we're also talking to companies that recycle textiles and yeah, and the end customers, of course, would be, for example, I mean, in case of the textile recycling, would be big retailers that would use the recycled plastics in the end. And yeah, we are currently we are talking to all of these, and we are also trying to understand the supply chains and yeah, identify the customers.
Yeah, the supply, breaking into that supply, that value chain is going to be the big challenge for you guys. I good luck. I want you to succeed for sure.
Yeah, I mean, what I can also add to this, the enzymatic recycling process in general doesn't exist at the moment. So currently there's one company in France, they also establishing enzymatic recycling. But yeah, but I think the barrier is to enter this market, but we are really confident that enzymatic recycling approaches is the way to go in the future.
All right, thank you.
Maybe let me allow also to go a very similar point, actually, like Matt, but from a slightly different angle. So I think it's well understood that it's complex and how you can penetrate that. But also the presentation, one thing I think you haven't been striking on enough, which I recommend you do, is the microplastics issue, because it's really the littering of the plastics which drives the circularity more than the availability of recycled feedstocks. That, in my view. So you can stress on that point much more than you have. But coming back, the one key issue might also be that it's the sorting of those different plastics. They don't come typically clean in one section. So having the right enzyme might be great. But how do you see it mixed materials? It not only composites based of different plastics, how you want to degrade them, and the other thing is in a mixed bag of waste. How can you tackle that? And then the second piece to that, it always typically comes with impurities or toxins for the enzyme. How do you conceive tackling that?
Yeah, so that's the advantage of enzymes. So they are highly specific, and if they are developed for specific plastics, they would, in a mixture, they would just identify the plastics that they are made for. So if you have a highly efficient enzyme for PET, for example, in a mixture of textile fibers, it would just degrade the PET. But yeah, we would like to tackle different types of enzymes specific for different types of plastics. And then you can apply either all of them together as an enzyme cocktail, for example, then all the plastics would be degraded together, which makes it a bit more difficult to purify the monomers in the end. So you could also apply one enzyme after the other and get the pure monomers out afterwards. Yeah, so yeah, for enzymes, you can, yeah, we evolve them. So, I mean, I mentioned that briefly in my pitch. So enzymes, we can find them. So we identify completely new enzymes from environmental samples. We can find them in databases, but we can also improve them. So enzymes that you would find from an environmental sample, they might not be efficient enough for industrial applications. So we can perform directed evolution in the lab, and we can make them specific for any kinds of conditions. So they at higher temperature or lower temperature, different pHs, and also additives and impurities that you mentioned during your question as well wouldn't be a problem for enzymes.
Got it.
How much optimization are you able to deliver with your evolution-based? Basically, you're optimizing the enzymes through each cycle that you're going through. How much in terms of initial enzyme results versus final enzyme results are you able to do for time, cost, etc., in terms of improvements?
Yeah, so I mean, that's the advantage of our technology. We can screen 10 million enzymes per day, and you can imagine you can have really large enzyme libraries, and the screening is really fast. So, I mean, we can go through, millions per day, and one screening round we can handle really quickly, although downstream we also need to, when we screen a sample afterwards, we also have to verify that our hits, etc. But I mean, one screening campaign we can do within 1 week, and then we do further tests afterwards, and then we can do different types of plastic and different types of conditions basically really quickly.
Does it make sense for you to commercialize each of the enzymes versus licensing the enzymes to larger players and just being the IP discovery engine?
So at the moment, what we discuss internally, we will sell our enzymes. So we will either, we will produce those enzymes and sell them to our customers together with the know-how. I mean, we will license the technology for the recycling, basically. So the know-how about the plants, how you can recycle the plastics together with the enzymes that we sell. So that's our model right now.
And what is the biggest risk that you see in the business personally?
The biggest risk in the business, I mean, like I said, so with the next 2 years, we will use to develop blockbuster enzymes. And of course, there might be a risk that we won't find efficient enzymes, but we really believe in our technology. We can screen millions of enzymes per day. We have the know-how about protein engineering and microfluidic technologies. So we are really confident that we will find those blockbuster enzymes.
Very good. Very good. I hope you do. We're getting a lot of feedback noise from someone. Okay, it sounds better. Matt or Ben, do you have any last questions for Evoralis?
Nope, not for me.
Good.
Thank you, though.
Thank you very much.
Awesome. Then thanks so much for presenting, Josephine.
Yeah, thank you.
And now, before we hand things over to our next startup of the night, I just wanted to take a quick time out to tell you guys, if you don't know, this is the Startup Tank Climate Investor Pitch Show. If you run a top climate company, pre-seed through to potentially Series A, go to thestartuptank.com. You can apply a pitch in front of incredible investor sharks like us, or at least like these two. I can't really put myself in the same class, but we're working to get there with Forward VC, and things are moving forward pretty quickly. We're investing in companies that move the world forward, pun intended. Speaking of companies that are moving the world forward, if we really need to be moving, we're going to need to be electrifying. And I'm going to be handing over things now to Stefan Dengler with ChargeIQ. Stefan, I met through Lacey, the LA clean tech incubator, and they're doing some pretty phenomenal stuff when it comes to the business of charging stations. You want to take things over, Stefan?
That's what I do. Thank you so much.
Awesome. You have 5 minutes, and I'll give you a 1 minute warning, just so you know.
That's good to hear. Yeah. So thank you so much for those inspiring pitches with some really good pitches and ideas so far. So my name is Stefan, and I'm one of the founders of ChargeIQ, based in Stuttgart, Germany. And with ChargeIQ, we solve one of the biggest upcoming problems our energy systems has. So now you see the next slide. So a few days ago, the German Chancellor for Economy and Climate Protection, Robert Habeck, said that it's particularly important that a focus is placed on the integration of charging infrastructure and the grid, and that our goal should be that renewables are used in a more efficient way. For example, that electric vehicles charge directly the energy that's produced where they parked all day long. So the solution sounds pretty simple, right? We need more charging infrastructure and more solar power. But there's another incoming problem that we are facing, and I'm explaining you in a second. But before that, we take a look at our current production of renewables and have an outlook that what will be produced soon. At that point, you probably think, looks good, more renewables, less emissions, but exactly that takes us back to Robert Habeck and our upcoming problem. The problem is not the missing charging infrastructure and the solar power generation. It's especially when the energy is generated and when it is consumed. Today, we have the situation that during the day, energy is sold to foreign countries because we can't consume all of it. And the thing is that we pay them for taking our green energy. The other way around, we pay high surcharges, if we need energy from foreign countries at night, that's in general generated by nuclear power or, let's say, less greener power plants. So in fact, we all have to pay for this imbalance. What made us at ChargeIQ think about it? How do we get more flexibility into our energy systems? And the solution we figured out is that we need to integrate those local power plants to the grid. We see that with upcoming regulations, more and more energy is produced in so-called microgrids. But what we need is not only to produce this energy, it also needs to be consumed and stored, but also one day given back to the grid to stabilize it. And what could be more suitable than, on the one hand, the biggest battery pack on site that you can think of, and on the other hand, the most flexible consumer. And both of this is your electric vehicle. So we know that we can predict shortage and abundance if we use the data we generate to give a more value to grid operators so that they can stabilize their grids, but also to charge charge point operators to take part in energy trading and offer their flexibility. But the question is, how do we get there? How do we reach as much, let's say, micro operators as possible? The solution is our B2B2C driven business model with our end-to-end technology. With ChargeIQ, our user-centric interfaces, charge point manufacturers, our B2B partners, can easily enable their customers to operate charging infrastructure on their own. Combined with our IoT technology, we enable them to use this local energy management applications. So we give our end customers the control over their charging infrastructure to configure it to exactly their really own needs. On the next slide, I'm showing you some examples. This looks pretty much like an, let's say, app store for e-mobility. The thing is that compared to others, we don't think that only our services are the right ones for the end customers. Through our software infrastructure, we build an ecosystem allowing our partners, those third-party software providers, to offer their services directly to the end customer. Here you can see marked with 1 star, the first productive services working on our platform, and marked with 2 stars, so more that are in our pipeline and coming soon. As you can see, extensions are just starting to grow, driven by new demands and new technologies. To give you a brief impression of our team, here you can see my co-founder Volker and me, supported by our team and our supporters. And
1 minute warning.
Yeah, that's right. At the moment, we're closing our seed series to further accelerate and implement ChargeIQ in more and more charging infrastructure. And that's like the end of my presentation so far.
Awesome, Stefan. Thanks for sharing. It looks like big things are happening there. Let me bring in our investor panelists so we can grill you and see what questions they have for ChargeIQ. You want to go first this time, Ben?
Sure, definitely. Maybe you can elaborate a little bit on who is your customer. So you might have missed that slightly. And the second piece, how you fit in with the competitive landscape, meaning given that, naming here the big ones which have been SPAC'd, like ChargePoint or so. So how does it compare and what you're optimizing for? So twofold question.
So our primary customer is the charge point manufacturer. Today we see, like in German or European area, about 130 different charge point manufacturers that do really good hardware, but they don't have like the right fitting software for every use case. And we see, as I mentioned, or as I showed you, a lot of different use cases. And we think it's pretty easy to put in the software partners we have to like all this charging infrastructure. So we sell our technology in a first step, a white labeled software solution. And as a next step, this IoT device to charge point manufacturers. And yeah, the competitive landscape is pretty big, but we say that our technology is completely hardware agnostic. So we can work with every hardware, even after you already installed your hardware. So we can also serve legacy that you can use our software services only.
And how does churn look like when you're software only? So can you switch it on and remove, or what is the factor of this integration? So how much effort is needed on your side or the hardware side to keep your solution?
Yeah, the good thing in charging infrastructure is that every hardware uses like a standard protocol. It's called OCPP, and that's standardized. So we can use like every hardware working with OCPP, and I think at least 95% of all hardware on the market is using OCPP. So we can implement like every hardware. Did I miss one question? Sorry.
No, definitely not. But maybe, so if I'm paraphrasing here. So you're optimizing for peak shaving and creating a microgrid, including battery storage, etc. This is how I got it, at least. The other aspect is it possible also via your platform to optimize for lower emissions, meaning that optimize for off-peak or off-hour electricity, so on pricing as well as
that's exactly where we started. What I just showed you is like the big picture where we're facing at, where we're pointing at. But we started as, let's say, the Airbnb for charging infrastructure, where we started with sharing charging infrastructure. We see that a lot of our customers use their charge points only at night if they're at home, or at the daytime when they're at work. And we say, okay, why don't we give up this the other time to other users? So we have like some first software services allowing you to share your charging infrastructure to thirds.
Got it. Thank you.
That's some first services on our side. Sure.
Thank you, Stefan, for that presentation. So this is the world that I lived in for my entire career before I started VC, the digital platform world. And so what you're trying to do, definitely needed. I'm a big fan of decentralized grids in general, and it just seems obvious to me that that's how we have to do things going forward. Big competitive landscape. You've addressed that already. Platforms are hard to build, and it's all about partnerships, right? So what's your partnership strategy right now, and what's your open source strategy? I feel like they're very related, but if you have an open source strategy, do you have one? Explain that. And then who are going to be your big partners that are going to make you successful?
We take every partner that's coming to us, we just give them access to a platform. A platform, what we think has just more value. If you have like different services, you can pick the one that you really want. If I offer you only one service that's coming from ChargeIQ, I guess that's not the best service. So we say every service is welcome to a platform, and we see that the feedback is pretty good from our partners. So we give them like active access. So we implement them. We give them like first projects, and that's like the feedback, like the pretty good feedback we have so far. That's like what they're looking for. So they don't have to implement or develop their own backend and just use our infrastructure to do their reselling.
You're going to find fertile hunting ground in the partnership area and hardware, because they can't do software. They're like thinking about the hardware piece, and they are excellent at that. And then the software is really what makes it that users want to use it, right? So,
and they're super lucky to have like they have to have like a huge bundle of services where the end customer can pick off, and that's where we're going to.
As a double click, what does the actual business model and economics look like for you and for the partners?
At the moment, we're starting with selling license to our charge point manufacturers, but we also have some first software as a service payments where we sell our software. But the next step is that we switch to a more data-driven business model, because we have like in the area of Stuttgart a mid-three-digit number of charging infrastructure running with our software. And we know pretty exactly when people are charging and how their habits are. And we know from the grid operators that this information is pretty interesting for them and pretty worth some money someday. So we change from license to SaaS up to a data-driven business model.
If I may follow up specifically on that one. So you alluded to that slightly, but what does your end game look like, or what would be the potential exit opportunities? How much would you need to scale? And I fully understand it's early, but what is your vision? Where you want to go?
At the moment, we see ChargeIQ more in the European market, and how much we need to scale is a pretty good question. So I'm looking for the next 1.5 to 2 years, and with this seed round, I think we enter like the the big e-mobility markets it's like Benelux and the Scandinavian markets, besides the German market, where we set like most charging infrastructure standards for European markets.
How do you see the developments with Ukraine and the German pipe gas situation playing into the development of electric vehicles in Europe and in Germany?
Yeah, that's two-sided. On the one hand, we see that like delivery times are up. Electric vehicles take way longer than they took before. Even charging infrastructure takes sometimes longer. On the other hand, people really want to use renewable energies. They don't want to go back to fossil. And with our technology, for example, using solar powered energy only, it's pretty interesting for them to skip like this traditional energies.
One follow-up or one last question from me. Why are you doing this?
Oh, that's a great question.
Because I'm from Stuttgart, and in Stuttgart you only have 3 options: working for Porsche, Bosch, or Daimler, Mercedes-Benz. And I'm like one of the biggest petrol heads you can imagine. And I worked for Daimler, and I saw that we're doing like the best cars, and we're doing only with combustion engines. And if I see what's like our world is changing, I think that's not the right way. And I think if we use more renewable energy and use less fossil energies, that's just the right way we all have to go. And I think that's like one little part I can give back to everybody to make it easier to use electric vehicles and use green energy.
I like it. Thanks for sharing, Stefan. You did an incredible job. Thanks for what you guys are doing as well. I know it's not easy building a startup. And I wanna move things on now to our next startup of the night. Let's take things a little bit of a different direction. We were on big scale. Let's go small scale with Nicholas and Doc's technology. Nicholas, do you want to tell us what you're doing with nanotechnology and platinum?
Hello, everyone. Actually, we're still with batteries here a little bit. And
oh no, sorry, okay. Well, we'll let you go first. I got the wrong company on board, but you are up either way, Nicholas. Sorry about that.
All right, awesome. Hello, everyone. So, as you know, batteries are the core of every technology. They make drones fly, electric vehicles move, and Iron Man kick ass. These chemical structures are expensive black boxes that are really hard to predict and manage. Imagine buying a Chevrolet Bolt, and after 2 weeks, they ask you to return it because of a battery flaw. Yes, this happened. More than $2 billion have been spent on battery recalls during the last couple of years. And yes, those batteries have been tested and certified. So what's the problem? Well, battery testing is outdated, and companies are avoiding rigorous testing because it takes a lot of money and time. After 6 years R&Ding battery algorithms and experimenting within the industry, we connected the dots and came up with DOCS. Our vision at DOCS is to create an end-to-end battery intelligence software in order to reduce battery risks, accelerate battery R&D, and promote circular economy. To achieve our vision, we created a battery testing platform that ensures safety by enabling effective, rigorous testing at half the cost. We speed up the battery testing time by up to 70% using machine learning algorithms. And finally, we simplify the process by providing out-of-the-box tools that automate most tasks. Of course, we're not trying to replace battery test engineers. We just want to upgrade their experience and help them focus on what matters. The battery market is growing exponentially and will be doubling by 2027. For us to penetrate the market, we will be focusing first on energy storage companies in the US and Australia. Now, to further scale our product, we will have a freemium and open source version where we will target individuals and students, because we believe they will be our champions once they join battery companies. And for our paid version, again, we're targeting energy storage companies, OEMs, second life testing, so on and so forth. For our channels to the market, we will be relying heavily on partnerships with universities, battery testing labs, and test equipment manufacturers. And we want to leverage our positioning in the Middle East to start a community in the region and bring energy storage research into the region. This is our business model. Basically, the companies will have to pay an integration fee at the beginning, and this is where we do software integration with their battery testing equipment. And then they will be paying a subscription fee per month, depending on the size and how many batteries they test per month. We definitely have competitors in the market. However, our true uniqueness lies by providing advanced testing algorithms that are powered by machine learning. The more data we acquire, the more accurate and competitive we will be. We just recently got the approval to open up the first AI-powered battery testing lab in the Middle East with a local university, and that will enable us to collect battery data, which will increase and enhance our competitiveness. And from the other side, we will be able to commercialize it. This is our team. We are a group of 14 Lebanese engineers that want to revolutionize the battery industry. We have a strong passion for batteries, software, and machine learning. We have on board amazing partners and investors that have been supporting us in our journey. Currently, we are raising a $500,000 round, which will enable us to commercialize our technology and to grow our team and finally prove and validate the algorithms that we still have at the R&D stage. We already have a letter of intent with an Australian manufacturer. We were really close to sign a project with a Silicon Valley-based company, but the recession put a brake on this. So now we're doubling down to finalize our first pilot project. Millions of drones, millions of electric cars, and millions of IoT devices will be deployed over the next 10 years, and billions of batteries will be needed for that. At that point, battery management automation will be really crucial in order to avoid frustrations, save money, and protect our planet. At Docs, we are reinventing the core. Thank you.
And thank you, and sorry for gooping up the intro a little bit on you. Let me bring back our investor panelists, Ben and Matt. And one of the quick questions that I just had for you is how many batteries actually need to get tested from a battery manufacturer? How large are these clients actually going to be, and how much are they going to need to use your platform?
Yeah, great question, Matt. So basically, there are two sort of clients. The clients that they are still in the R&D phase, where they are researching and R&D new chemistries. So every 6 weeks, they will be creating a new batch of cells and trying to test them, collect data, check how those cells are performing, and then redo the test while making small changes. You have other companies, such as big energy storage companies, that will just test their batteries once they have a new architecture or once they're working with a new chemistry. And here we're talking maybe every a couple of years, one test.
Which means, how large is the market for actual battery testing? How many battery manufacturers are there? Your pricing seems very cheap.
I totally agree. This is, if you want, for us, a Trojan horse approach in order for us to connect to the industry and be able to provide. Eventually, we want to open source that software, but we just want to put our foot out there in the market, especially in the West, and leverage our position in the Middle East to open up battery testing labs, contribute to creating standards in the market, and be able as well to benefit from bringing in lithium-ion technology here, basically.
Okay. Matt, do you have questions?
Yeah, so pretty interesting. Like we did diligence on a battery company recently, and we dove into the QA process for them. And so I kind of get the market, and I think it's huge, right? Because it's continuous testing. It's not just like we test and then it works and we just manufacture millions of batteries and everything is golden. This is going to be a constant, always on thing. So I think your pricing will probably have to change at some point, but that's okay. That's, my question is, when battery technologies change, what happens? So like there's lithium-ion batteries are obviously the king gorilla today, but it's going to change over time. And I want to know about the integration of your current platform with all of the different kinds of manufacturing that goes on. That's your big challenge, right? To keep up your product and your platform with the changes in the battery industry. So what can you say about that?
So basically, as you know, machine learning algorithms, you need data in order to train them, in order for you to be able to work with them. That's why we're not just investing our eggs in one basket, which is machine learning, per se, to predict when the battery is going to fail or when whatever technology is going to fail. But we're investing heavily as well in analytics and providing SaaS features that will enable you to do quick reporting. To be really honest, there are plenty of algorithms that we're working on that are not even in the state-of-art papers that are available out there. So for example, from being able to simulate how the cell or how a battery will behave in real-world conditions before even deploying it, by creating an optimized testing procedure. So there are still lots of gaps in the market. Machine learning is something that we're putting on the edge because it's something that it is exciting for companies, but it's not the only thing we're working on.
Great thing to put on your deck, but
exactly. And from the other side, we have opportunities as well, not only to keep on scaling vertically in the battery domain, but to scale horizontally through analytics to other domains as well in the testing industry.
Gotcha. I've got a couple of questions, but I got to noodle through a couple of things first.
Then let me take off here. I just want to ask you about particularly also the AI and its deterioration. So how do you avoid that and the AI entropy when it's deployed? And it doesn't necessarily mean it stays connected to your hub. Maybe you can elaborate how you avoid basically giving false indication or false fallout.
Yes, exactly. So basically, Ben, in our platform, the way we designed it, basically in a way for you to gain trust as you go in our AI algorithms. So what happens is that if let's say you have access to your old battery testing or cycling data, what you can do is upload the entire measurements to our platform, and what you will be able to do is predict, using, for example, the first 100 cycles, how the battery degradation or how the capacity degradation will look like, and you will be able to compare the actual data with the predicted value. So that way, as you go, you will gain trust in our system. Now, of course, if you're using a new technology, which our machine learning algorithm isn't able to handle yet, this is part of our backlog, but again, because we're still a startup, we didn't have the time to manage everything. But we want to build also another machine learning algorithm that will tell our algorithm when not to predict. So basically, this is another R&D area that we want to work on, but again, step by step.
And what are the areas, or maybe by application, and particularly also on the regions where you have the most application of batteries? And I'm not talking only in mobility, but really in all kinds of batteries, which should not fail. Any luxury good, appliances, or whatever it is. But what are the areas or the applications where you have most failure and potential for callbacks?
Based on our validation, Ben, we want to focus on two main areas. The first area is R&D stage, because it is still a manual process and we want to accelerate what's happening there. The second biggest area is in product qualification stage of a company. So we talked with the solar renewable energy companies that want to deal with battery manufacturers. The problem today, if you go to a battery manufacturer, they will give you a generic data sheet telling you, okay, the battery will last for 10,000 cycles. But if you're building a project that is worth millions of dollars, and you want to procure batteries worth millions of dollars, you cannot just trust this 10,000 cycle metric. You will have to plug in a specific number into your financial model to study your ROI. So what companies are doing today, they are going to third-party testing facilities such as AVL and DNP, and they're spending $300,000 per year per experiment in order to check how those specific batteries from that particular vendor will behave in their own particular application, and to plug in that number into their ROI. So what we're aiming to do is cut down this cost by half and speed up the process by 70%. And this is where we believe we will be able to help at most, application-specific testing. Did I answer your question?
Yeah, definitely. So
awesome.
Yeah, I mean, speeding up testing is like a huge benefit to battery manufacturers. They're going to love your stuff. There's a lot of competition, of course, right? And I saw your competitive slide. And of course, you have all green checks and they don't. But if they made this slide, if your competitors made this slide, where are your red X's? What don't you do and that they do that you feel like you have a competitive disadvantage?
Yes, definitely. So first one is in real-time battery monitoring and prediction. So being able to monitor your battery while it's being operated and getting and understanding when the battery is going to fail. This is something that Twice and Accure, they are leading the market in. You have Volta IQ. They are great in analyzing and graphs, but we took the machine learning game from the beginning, and we're implementing, if you want, machine learning algorithms into the testing process. So it's not for monitoring batteries after, but during the testing process. So this is the niche that we're getting in, if you want. And we don't want to build a black box for companies. We want to provide a tool for battery manufacturers and researchers to be able to use it like MATLAB, but just an abstract layer, if you want. Less complicated.
Cool.
Why are you only raising 9 months of runway? I feel like that's setting yourself up almost for failure if you have to start raising again in a couple of months.
To be honest, Matt, after the recession, we decided to bootstrap, and then when I reached out, I felt that this would be a good opportunity for docs. The problem is we approached plenty of VCs in the past, and all the VCs want traction, paying customers, so on and so forth. But the problem is we're not just a SaaS software startup, we're in deep tech. So we have algorithms in the backend that needs validation. We need the testing equipment. We need all of those. Yeah. The other problem is our positioning. So we're based out of Lebanon. We're registered in the States, but we're building that network and, if you want, interest as we go. So it's really hard number one, for local VCs to understand whatever we're solving. So we're deep tech, and there are no deep tech in the region. So what we're trying to do is pitch in such competitions, try to grow our network, and try to get that first customer or strategic partner before being able to raise a VC round. So let's see. And thank you for allowing us to pitch here. Maybe that would be a great opportunity.
You're very, very welcome, and thanks for the pitch, and thanks for nailing it despite my terrible introduction on that. My last question, I think, for you would be, what do you do if this fails?
I've been working on docs for the last 7 years, so failure is not an option. We started
Great answer.
Autonomous drone company where the drone can land, exchange its batteries. Then we jumped into being able to monitor drone batteries and provide predictive analytics for them. We pivoted to monitoring batteries in real world scenarios, predicting when the battery is going to fail. And to be honest, as the years went by, the experience went up. So if we put in just more enough time, I guess, locking in the chemistry with the team, this is number one focus. Like with the dream team, you can build anything. So it's just.
How do you support yourself for 7 years without real revenue?
It's a roller coaster, but we just live once, and this is a passion for us, using technology and being able to solve problems.
Awesome. Well, thanks go ahead, Ben.
Sorry to interrupt. I have one more question, actually. So where, and I'm pretty sure you get this quite a bit, where do you store the data, and who owns the data in your relationships with the customers?
We're really flexible. So if the customer wants to use it on premise, we can host it on premise. We currently, our MVP is deployed on AWS. So if, for example, Australian companies told us you need to host in Australian servers to hold the data. We're really flexible. Basically, one last thing, and this is something we thought of, the companies that would like to contribute for this public machine learning will be able to benefit from this public machine learning. If they don't want to contribute to that public machine learning, they will be training their own machine learning models. So that way we can incentivize companies to contribute as well.
Great. Thank you very much.
Smart move. Thank you, Nicola. Thank you, Nicholas, for presenting.
Yeah,
Next up, we are going to have Mike with Sumting. And before I hand things over to Mike while he's getting everything ready, I just wanted to let you guys know, of course, this is the Startup Tank. If you're interested in applying to pitch, thestartuptank.com. And we are presented by Forward VC, our early stage climate syndicate for accredited investors focused on world positive, world changing companies. If you want to learn more and invest in companies like this, visit forward.vc/syndicate. We're not soliciting you, you're coming to us, but now you know where to go. Speaking of, if you're trying to set up an SPV for a syndicate or to raise funding for your next round, Leva is a great way to do that. They're sponsoring this season of the Startup Tank. You can find out more at forward.vc/Leva. And now we're going to hand things over to Mike with something. Mike, are you ready to roll?
I think so. Can you guys see my screen?
Yes, we can.
Yes.
Your 5 minutes starts now.
Awesome. Okay, well, so my pleasure to present. Thank you, Matt, for the introduction. I'm going to tell you about Sumting. Sumting is a digital platform for nature restoration that links every payment to proof of the results. Why is that important? As you can see, most of us want to compensate our impact on nature. But the leading alternative to do so, carbon credits, is literally not giving us the results we're looking for. Maybe some of you know this from personal experience. You make a payment and then you never hear back from what actually happened with your money, what was achieved. And even if you look closer at carbon credits, you can see that they are really not moving the needle. 96% of all the carbon credits out there is avoiding carbon from being emitted rather than taking it out of the atmosphere and cleaning up the mess that we've made altogether. So that's where we come in. Our platform links nature restoration projects to demand on the other side. So if you have a closer look at our ecosystem on the supply side, we have a host of nature restoration projects. One category is sinking carbon, for example, by planting trees. But we quickly learned that we can leverage our infrastructure for other kinds of nature restoration projects as well. So salvaging ocean plastic, fighting desertification, and restoring wildlife are also part of our scope. And that's on the supply side. On the demand side, we see a mix of our own channels, so our own web shop and subscription models, providing it to businesses that can offset their impacts. But also, because we have this digital layer, we are able to integrate into the solutions of third parties. So, for example, in an e-commerce checkout, in a savings app, all of this can be integrated into the places where people want to compensate their impacts. And now, so over here on the right, you see the example, and I'll give a quick demo in a bit of how this actually works. But the benefits of our solution are threefold. The first is the transparency, right? The results are undisputable because they are visible directly. And we can also verify that in the future using satellites and IoT, for example. The second benefit is that giving money to an actual result is much more rewarding for the people contributing. And you see that, right? You see that the average donation multiplies by a factor of 3, which is very significant. And it's important because this challenge to restore nature is massive. And then finally, by providing this digital platform, we can make the entire nature restoration ecosystem more effective. Our partners can leverage our IT infrastructure for free and lower their overhead costs on IT and marketing, and thereby use the money more effectively to restore nature. Our business model works as follows. So our margin is 1/6 out of every transaction that goes through the platform. So we essentially ask our partners how much money they need for a contribution, a tree, a kilogram of plastic salvaged, and then we plus our margin on top of it, which is justifiable because we maintain the digital infrastructure. And then in terms of the growth model, we really go to market focusing on businesses. Businesses give us the scale that we need to complete these projects and make it accessible for individuals as well to contribute to nature restoration, which in turn creates exposure and trust with the businesses that are compensating via our platform, bringing in more businesses to join in. Then looking at the competitive landscape, so we really see two dimensions that are important here. And the first I already talked about is the depth of feedback. So what are the actual results that I can see? And the second is the breadth of solutions, because seeing your tree once, that's great, twice, that's great, but seeing it 100 times is not perhaps as engaging. But having a tree one time and then a coral reef and then a beehive that's being restored, that's what makes it engaging. And that's what can really grow our recurring revenues. So we see ourselves as the aggregator of those kinds of projects. And because we have that, we can offer the subscription model and really grow our business over a long term as the one-stop shop for nature restoration. Then looking at the team, so Matt, maybe similar background, but I also worked at building digital platforms for 6 years at Deloitte Digital. My co-founders have really complementary skills, one in development, that's Guido, and then finally Gijs in really the commercial role. And we have a board of advisors that really helps us on the sustainability and the platform side of things.
Your time is up. I am sorry.
Okay.
I'll give you an extra 10 seconds because I forgot to give you the last topic.
Cool, no worries. Yeah, this is this is the traction that we've shown thus far. 900 transactions already through the platform, over 8 projects live, and our partnerships are up and running as well.
Awesome. Thanks so much for sharing and presenting. Hand things over to Matt first this time. Matt, do you have questions for Mike?
Yeah. So first of all, love what you're doing. I have a deep-seated hatred for carbon marketplaces right now. It's just like shifting chairs on the Titanic kind of thing. And I love biodiversity, and there's a paltry number of companies trying to deal with that from a for-profit venture perspective. And I'd love to find business models that do kind of what you're doing. So you're replacing carbon offset, I'm going to fly today and I want to feel better about it kind of stuff. That's a big market for startups, but I'm not sure it's a big market for people. I'm not sure if it's financially viable. So can you talk to me about what the demand is for this kind of thing and where you get that proof, other than other startups that are like, hey, you're going to take a flight, offset your carbon footprint, which I think is horseshit stuff. I love what you're doing, by the way. Just make me believe that it's going to be financially viable for a venture-backed startup.
Awesome. Yeah. So, what really makes us unique is the fact that every single tree in this case is uniquely identifiable. And that makes it super interesting for companies because they can allocate each contribution to a customer, an employee, a stakeholder. And so, yeah, exactly. So now we are closing a contract with a large bicycle selling company that wants to offset their 250,000 users. And the cool thing is that with this, they can provide a tree for every user, and then the users can compare the trees, where they are, how they're growing. And that is really something that carbon offsets or those certificates would never be able to do. So yeah, we're already seeing that traction in the market. And then in terms of the size of that market, really the sky is the limit, as you know, like carbon credits, and then even more broadly, the nature restoration ecosystem.
Okay, great. I think I get it. I'd be interested in double clicking on all of the details, but I'll leave that for another time.
Cool.
Yeah, maybe you can talk me through also the details of how that actually works, specifically on the time component, where a lot of brokers go off, they collect all the offsets, credits, and then they go and buy those credits, either in the spot market or find those projects. But how do you synchronize, basically, how do you drive your pipeline of projects while also tokenize it appropriately, and then making sure no double counting? Can you talk me through that?
Yeah, so how it works is we aggregate the demand on one side and then allocate it to our partners. And that can be based on their capacity, and which also has a time dimension. So sometimes the planting season in one country ends and then in another it starts. So that's where we can be smart and allocate it to the right kinds of projects. Yeah, I think that's one mechanism for sure. And then how, in addition, we really have a triangle, we say, of three things that we use to monitor those agreements. So one is the legal aspects. We have contracts with the partners that talk about the level of feedback, but also about the fact that they are not allowed to double sell and all these kind of things. The second is the social aspect. So we have very close relationships with the people on the ground doing the actual work and also learning from them what works. And then finally is a technology aspect. So all of the pictures that are uploaded onto our platform are scanned by a image recognition algorithm, and in addition to the date and timestamp that we also analyze. So that makes sure that we can verify in an automated way the proof that is shared.
It sounds like a lot of work to verify that a tree is a tree. It makes me wonder if it's economically viable, and if it even makes sense. I like the fact that you saw the 3 times increase in the average donations or spend. How did you guys compare that, or where did that number exactly come from?
Yeah, so this is from one project here in the Netherlands. It's quite well known, and they have created this little platform for themselves to show the actual proof of a contribution. And since they have that platform, their average donation has increased with a factor 3. But the only missing link in their solution is the fact that it's just for them. But the strength of such a platform is in opening it up and delivering it to multiple projects. So that's really what we see as the future, also because people, and especially businesses, like to kind of consolidate all of their efforts in one place instead of having 10 separate partners or separate logins for this kind of thing.
Could you do something similar, just measuring tree density? So just wait till it's fall, all the tree leaves fall off, and then you try to guess how many trees there are. I feel like when we try to make things more digital and less manual to make them scalable. And this is somebody walking through the woods taking a picture of every tree. Or am I getting that wrong?
No, what we learn from our partners, it's a very minimal additional effort, because they have to plant a tree anyway, and they have a smartphone in their pocket, so it's not that much of an effort to take that additional picture. But what I agree with you totally is this fact of like satellite data, for example, playing a major role in our role as a platform to monitor and audit the actual work, even beyond the input that the partner delivers themselves. So that's where in the future we're looking at satellite imagery, IoT, to really deliver further auditing of the results. But the effort for the partners is relatively low. And perhaps like this is just geeking out on the solution, but what is really cool, for example, with plastic salvaging, is that those partners need to monitor how much plastic is in the bins anyway, because they need to empty it. Right, and it's just a matter of putting that data and using it in the front to finance the actual results. So the effort is quite minimal, I think.
Especially as like trees get automated with drones delivering the seeds, the drones can automate that. ML can automate on the background. I actually don't think the asset gathering is going to be the hard part. I do think the really big upside for you is that it's personal. You're building a social network around natural habitat restoration in a way, and that gives meaning to the people that are like pushing for this, which are your natural end customers in a way.
Yeah. Who are those key customers? Or is it companies buying it for their users, or how can you achieve a sort of a snowball effect, or what are the attractive e-commerce that you go after? What is the key addressable market?
Yeah, so at the moment we are pretty focused on technology companies and professional services companies, because what we see is that talent really is a key driver for these kinds of initiatives. So anyone can buy a carbon offset, but if you really want to do this well and differentiate yourselves in the market, you need to go beyond those kind of things. And so we're seeing really good traction with employers in that way to provide this as a perk, for example, to their employees, or create a more sort of democratic way to compensate for the business. So now everyone can allocate a slice of the total budget that is available for nature restoration within a business. And that's something that we can also facilitate with our platform in that way.
And how do you see the future of that? Those are one-offs, and you need to continuously be pushing for that, or continuously have another enterprise that want to get something. But how can you build that as a more a different model, like a subscription model, and build some ARR? Or
yeah, exactly. So that is actually the subscription model that we are now actively pushing. So then you see companies kind of taking that subscription for their employees. And that really helps to bring in the recurring revenues, obviously. And well, how do I see that evolve? Like in the future, obviously we grow our scale with the partners. What our dream is for the future is that we create a sort of new model for donations that, at least in the nature restoration space, it will become the standard that you get the results of your contribution instead of the black box status quo that is there currently. And if we manage to achieve that, then we tap into all of the flows that these partners currently have, accelerating their impact and growing our platform.
Are there any projects where you would stay away? And I know that mangroves have come under quite some scrutiny, but what is the restoration projects that are attractive to you, and what are the ones that are not?
Yeah, so we have a couple of hygiene factors, I think. So one is this level of feedback. Some projects do not want to or are not able to comply with that, and then it's immediately a no. The second thing is really the transparency that we ask from our partners. So we ask them also to break down their costs to show us and show our customers how much of that money goes to maintenance, how much of that money goes to permits, everything in order to make sure that this impact is lasting, right? Anyone can throw a seed into a field, but if it never matures into a tree or into a forest even, there's really no point. So I think that's the second thing, like this transparency and the longevity of the contribution. And then finally, I think the integrity related to how they treat their workforce and their people that are doing the actual work on the ground.
How many trees get planted each year, and how much does it cost to plant a tree? I'm just trying to think about how big something like this could be and how much you could actually charge on your side.
Yeah, so on our side, currently with the projects that we have, in the tree category, it ranges between 5 and 8 euros, roughly. And now if we look at, so we are currently in the process of setting up a local ecosystem in Kenya together with a partner, because in Kenya, as one example, nature restoration is regulated by law. So the government has set a target to plant 3 trillion trees, and every company in Kenya is kind of obliged to comply or take its share in that goal. So it's a very interesting market for us, and it just shows the potential, right? If you look at that market size.
Kenya wants to plant 3 trillion trees.
Yeah.
I think there's 3 trillion trees on Earth.
Well, no. So there are really the potential to plant trees. So it's from 7% to 10%. They want to increase the cover of the trees in Kenya, and that's just a massive potential market for us.
Okay, understood. Thanks for clarifying that. I think it's interesting. I think there's definitely challenges, but I think there's a lot to be done as well, and you guys can definitely play a role in that. Thanks for presenting. Anything else, Ben or Matt?
No, I'm good.
No.
Thanks for the presentation.
Thanks so much, Mike. Then I want to hand things over to our last startup of the night. And before I do, if you haven't subscribed yet to the Startup Tank, hit that subscribe bell on YouTube, and make sure you hit the subscribe bell so you actually get our content, get our pitch sessions in the future. And you can also subscribe. We're also on Spotify, Apple Podcasts, Google, etc. If you visit thestartuptank.com, you can find links to all of those. Those are also all in the show notes. And now I want to hand things over to Mikhail with Got Foods. I'm getting hungry. I'm sure a lot of people are if you're in Europe. And Miguel's got a tasty, cheesy solution for you.
Good evening, everyone. Hi. Can you hear me and see my screen?
Yep.
I see.
Awesome.
You are good.
Super. So yeah, one more time, good evening or good afternoon. My name is Michael Wettstein. I'm the co-founder and CEO of Got Foods. We are a European food tech company that replaces dairy for contributing towards a sustainable...
One sec, Mikhail. I don't see your screen. I'm not sure if other people are seeing it.
Let me try this again.
And while we're setting that up, again, if you haven't subscribed, thestartuptank.com, be sure to subscribe. We're on YouTube. We broadcast to LinkedIn Live. You can find us there. Find us on Apple Podcasts, Spotify, Google, or wherever you listen to podcasts. And if you're an investor interested in these type of companies, interested in investing in the companies that are really changing the world with massive scale potential, the startup forward.vc, so the number 4 ward.vc/syndicate for more details and to apply. Any luck, Mikhail? Otherwise, you can send me the file and I can open it on my side.
There you go.
Any success?
You are good to go.
Okay, perfect. So second attempt. Hi, my name is Michael Wettstein. I'm the co-founder and CEO of Got Foods. We are a European food tech company that is contributing towards a sustainable and healthy future. Global consumers are restricted to consume plant-based dairy alternatives because their preferences are simply not met. They wait for better taste, texture, mouthfeel, and the right sweetness. But global consumers are also missing a high-quality nutritional profile that supplies them with protein, calcium, micro and macronutrients, and that is free from allergens. Therefore, superior dairy alternatives are required. But what means superior? This means to be equal in taste, in texture, and mouthfeel to dairy. It means high-quality nutrition, such as protein, macro and micronutrients are needed, but it also means accessibility, being free from allergens. Got Foods incorporated this approach into plant-based products. We started off with a milk replacement, followed by curd cheese and a line of spreadable cream cheese spreads. Our products have dairy taste and texture, a creamy mouthfeel. They supply up to 5.5 grams of protein. They are having incorporated natural fermentation. They supply probiotics, and they cause no allergens. We have executed quickly. Our in-house pilot production facility is already up and running. Our distribution initiatives launched our 5 products into more than 50 leading plant-based shops in Europe. Besides 25% gross merchandise value growth and 100% B2B rate, our SKUs are currently under retail listing review. Furthermore, we have signed partnership LOIs, launching us into more than 1,000 retail stores, into more than 15 larger food service chains, and reaching us $175,000 monthly revenue. We received exceptional feedback by consumers and our existing business partners, which all have fallen in love with our products. They appreciate the taste, texture, and the functionality. For additional product validation, we have sampled over 15,000 people from more than 15 nations, such as the US, Canada, UK, Germany, Finland, Japan, and beyond. Furthermore, we have received great media attention, pointing us as the leading dairy alternative company in the Baltic region, and we have been awarded as one of the top 100 most innovative startups in the Central Eastern European region. We differentiate ourselves through an unparalleled dairy taste, high amounts of protein, and natural fermentation. We have 50% less fat than our competitors while being free from coconut fat, and we keep a competitive shelf price. A combination of two founders is the key driver for God Foods. I bring more than 10 years experience from the financial industry, previously working for Credit Suisse in Switzerland. My co-founder, Everalis, has over 10 years experience as a food scientist, working for Christian Hansen and the Carlsberg Group on the ingredient, equipment, and large-scale production side. And there is a huge untapped 1 trillion market opportunity that simply has to be addressed. At the same time, the dairy alternative market is established while keeping growing in double digits. The plant-based spreads market has been strongly evolving, showing with 20% strong growth numbers. Our go-to-market strategy is a marketing mix of referrals and sampling campaigns, a mix of media channels, and a mix of social campaigns. Our sales strategy starts with direct distribution into independent, plant-based, and health shops, as well as food services. In step 2, we start large-scale distribution to retailers, food service chains, and large-scale food manufacturers. Our growth strategy focuses on European distribution into more than 4,000 points of sales over the next 2 years to get the company prepared for scaling and international launch. At the same time, we will increase our product assortment across various categories in the dairy alternative space. We raised our seed round of $1.5 million in order to implement our go-to-market strategy, accelerate production, build our distribution network, prepare our core technology for filing IP and patent, and reach $100,000 in monthly revenue. We warmly invite you to join to disrupt us the global dairy industry together. Thank you for your attention.
And thank you, Mikhail, for pitching. Let me bring in our other investor panelists. It certainly sounds interesting. Unfortunately, we can't actually taste it, especially here through Zoom. That's one of the failures of Zoom. They haven't figured out that technology quite yet. Let's see. Where is Ben? Actually, while I'm bringing them in, is that a problem you have with pitching investors? What's the best way for you to get?
I know I'd want to try it.
Tastes like dairy.
Have you had that? Have you had that as a problem when pitching investors?
In what sense?
Just that they can't try it.
Oh yes, all the time. Everyone wishes always to taste the product, and yeah, we received a lot of good feedback from many people.
I liked the not weird as a testimonial. Ben, do you wanna take things away?
No, great presentation, Nate. Thank you very much for showing it. And now it's from my personal experience, it's only when you experience that maybe you're a little bit lactose intolerant, then you start to rethink what you're actually you're consuming as a product. But that's only my personal experience. So kudos to that. Now, but that drives specifically my point when you say pitching to investors. That's in itself who are already interested in is challenging. But how do you drive that? You showed us the overview of how you target your go-to-market strategy. But when your uniqueness is something you feel, what are potentially better ways as your entry point into the market where people might not need to experience it before they buy it, or believe in the experience before they buy it? What could be other differentiations to your competition? And the dairy market is tough. It's dominated by big players. And but maybe what are other ways how you could position it, or is that your primary channel that you target?
Yeah, it's true. It is tough. It is very tough. What really works for us well and what is a strong enabler is sampling. And we do tons of sampling to not only reach the customer, but also to educate them and explain them this product, how it is and how it works. Besides this campaign, for us, it's definitely a big question. How will we position these products? Because to some extent, you can think about there is a bubble of vegan brands being positioned as a plant-based vegan product. And we try to find this fine line to have it not positioned too much as a plant-based product, but simply, let's say, as a curd cheese or simply as a milk or as a cream cheese spread. And this can be one way to reach people, because when they are simply curious and want to try your product for various reasons, then we also get to the customer.
Yeah, I live in San Francisco, and there's like 700 milk and dairy alternatives on the shelves everywhere. And my wife's a vegan, so we thread that needle. I love ice cream, so I'm wondering if there's an ice cream thing on your roadmap. But like Ben said, dairy's hard. It's all about whether people like it or not. It's really not about vegan this or alt this. It's about, do I like my latte with your product in it? And so I think, that's a sales channel I'm sure you're looking into, like going into like the super cool hipster cafes. Like if you get it in blue bottle, then you're like a made man in the venture world, probably.
But you're more on the cheese spread side of things. You're more on the alternative, not so dairies.
Yeah, the milk is still an interesting product and a good product. And yeah, we also met these people from the US that passed by, tried our product, and they consume Oatly and Ripple foods in the US.
Mm-hmm.
And I mean, we were happy to hear from them that they like the product, so it is accepted. But the milk market in itself is super tough, super overflooded. So we use the milk as a door opener to get into new points of sales, new shops, new cafes. They try it, they love it, they're satisfied, and then they usually ask us, what else can you offer? And then we can bring in all of our rest. So for us, the milk is more a door opener. And with this cream cheese spreads, we really can differentiate, and we really have something that is not yet that fully overloaded in the market. Because most of these products are, cashew nut or nut based. Most of them are just full of carbs, but have little or no protein at all. So there we have really a sweet spot. And when we go really to this absolutely classical standard dairy consumers, they don't really understand the product or what we do or how we do it, but they taste it, they try it, they love it, and they just buy it. And this for us was a huge learning, like best food, really good tasty food you just can sell, and at the end of the day, for people, they don't really care.
What's your price compared to a traditional cheese spread, etc.?
So compared to the traditional ones, I would say we have double price compared to our competitors in the plant-based space. We are positioned on the same price as they are.
Even what are your margins?
On the milk, 50 gross, and on the spreads, we have 300% gross margin.
Have you thought about killing the prices so you can just move the volume?
We have thought about that. So far in all of our discussions with businesses, but also consumers, price was never a discussion. So we are not sure if we can win something with that, just go lower in price, but we definitely test it or try it out. But everyone so far told the price is reasonable.
But that's because most vegans are well-to-do people that have too much money. If you're trying to access the full kind of market of the general dairy consumer, the average person, double the price isn't going to cut it. I don't think. Maybe that's just me.
It's a fair point, and it's definitely something that we also should try out with initiatives if we can win more volume.
How do you plan to win more volume? What's your strategy to get into more stores?
So at the moment we are under listing review with several distributors. We are building the retail stores, and yeah, our strategy there is start with these really large shopping malls where we have 7 days a week, really a lot of people from morning till evening. So there we have the big flow of people that we need to bring in the product. And when we are successful in the large shops, we can start to expand to more regional or slightly smaller retail shops. And we plan to use this model also, like not only growing here in the Baltic region, but also apply this then in different areas such as Scandinavia or more the Central Eastern European region, more looking towards the GACH region already.
Have you evaluated other distribution channels, maybe via the big incumbents? I could imagine that you have a lower carbon intensity of your product. So that is one question. So what is the savings in comparison to a traditional cream cheese spread, and how can that be measured? And B, basically, is one of the big ones like Nestle or so, would they be interested? Have you engaged in discussions with them to use their distribution channels? Because they all pledge to reduce the carbon emissions and the carbon footprint in general. Is that a way to go at it?
Yes, this is a very good question, and such strategic partnerships for large-scale distribution are always interesting for us, and we believe they can happen on a regional or national level. Let's say when we have in Spain a dairy giant, this can work for us, but also when we have someone with some large company like Nestle or any other dairy giant, this can be a way to really increase this distribution strongly. In terms of the maybe measurement of the carbon footprint, so we are in a life cycle assessment to measure that more well. At the moment, we know we have 70% less greenhouse gas emissions compared to standard dairy, and 25 times less water consumption compared to standard dairy.
What do you see as the final success or outcome for the company? How big can this get?
Great question.
So on one hand, we can build a lot of new markets across Europe and also take this setup to the US or to Asia or to other places. At the same time, there is still so many products that can be still launched into the market that are superior in different aspects, such as nutrition, how can you digest the product, taste, texture, and so on. So the field is really open to become this global portfolio company full of plant-based dairy alternatives, even though we can get on a local level very fast and unpleasant competitors for some of the big companies. This also could be a faster exit. So it depends on where do we want to take this.
Where do you want to take it?
We definitely want to cover a really big piece of Europe with our products and our company. And then let's take it from there. For us, it's definitely one of those markets like the GACH region or the UK or Spain that we would like to have to really have the business scaled and then see it from there.
Okay, fair enough. Ben, Matt, any last questions for Mikel?
Out of curiosity, actually, so what is the most highly valuable non-dairy product that you make with the biggest margins?
The cream cheese spreads have definitely a very high value, especially the tomato one with the best cost performance.
Is there actually tomato inside?
Some dry tomato. Feels a little bit like some vacation in the Toscana in Italy. And yeah,
what a salesman.
Yeah, I tell this every week to people, and yeah, they buy the product afterwards. Sorry. But yet the curd cheese, I would say, is not the absolute best cost performer, but it's a high value add product because we are the first one that have this here in this region. There is a couple of cream cheese spreads, but nobody has a curd cheese here, and this is also gives us a lot of value.
And you're fermenting. Are there probiotics then?
Yeah, we do this fermentation, like lactic acid fermentation, and we have then the probiotics on top. And yeah, we meet really a lot of flexitarian people, and for them, they are so concerned about the environment and about the health. And these things are really crucial for them to really have fermentation and probiotics. But we also can say the product itself wins on texture, but also digestibility and on the acidity level, that you even simply can consume this product much better than anything from the cow milk.
Awesome. Thanks so much for presenting, Mikkel. I have one last piece of feedback. And I know if we were doing this in another language, I would have the same problem, but mouthfeel isn't a great word for how you describe it. Come up with something a little different.
It's the industry standard, though. Every food company
is it?
I've seen, everybody says mouthfeel.
I apologize. It's the food industry that's
it is a weird word,
goofy.
though. I agree with that.
Yeah.
Mouthfeel is like,
I like tasty texture.
I think we should make that the industry standard.
You heard it here first on the Startup Tank. So guys, this is where we've come to the kind of the end of the pitching segment of the Startup Tank. And now I bring our panelists back. It's time for us to go to the climate startup of the night. So here it's who are your 2-3 favorite companies? And we try to come to a consensus on our favorite company of the night, the most promising one, the one we'd want to set up a meeting with, potentially invest in. Do you want to go first, Matt, since you seem to be up and at 'em?
Applied Bioplastics and the Mike's company, Sumting, would be the two. I want biodiversity to win a deal, so I have a bias towards that. And Applied, we've talked to before, and I've seen traction, so attracted to that.
And Ben, what are your thoughts?
It might be a little bit boring, but Alex, you did a really great job in introducing Applied Bioplastics, and it seems like you're well aware of the complexity and how to address the complexity of the value chain and how to go at it to extract value from it with all the current tailwinds that are in, but it still remains challenging. So that's highly intriguing. And the other aspect is, although it's maybe a little bit more nascent, is ChargeIQ is going at an interesting angle. Also, it's really, I would say, crowded space up to the point, but there's still plenty of capital going in that segment. And there's a need in order to balance small grids. And that only becomes apparent after a while when there's more and more charge points for EVs. And that becomes critical, especially for the smaller grids when they need to balance it or just to shut down some of the aspects. So there's and I think it's very timely where energy is in huge demand and it's critical, particularly for the upcoming winter, given all the outside circumstances. So that's very timely. Also, there's plenty of solutions, but you can find a good niche there. So those are both of you did a great job. All of you did a great job explaining it, but this will be the short list for me at this stage.
I think everybody did a great job as well, but I would have to echo you, Ben. So for me, Alex and Applied Bioplastics are definitely my favorite. That there's a reason why we're looking very, very closely with Forward VC at investing in the company. We find them to be fascinating. Decarbonizing plastic is, we have too much plastic and it's coming at a faster and faster pace, and finding a way to plant-based, that's pretty big deal. I like what ChargeIQ is doing as well. I like it for a bit of a different reason, and that's that they're building a platform that others can build upon, because when you own the platform, you are the playground everyone else plays on, and you can be the facilitator that really grows and scales. If they become the platform that brings together charging, electrification, electric vehicles, and all of the services that go on top of that, there's a massive potential. And if they can do that without having to pay hardly anything and have their business model be monetized with data and other means as they build and scale, I see a lot of potential. But for me, and I think for all of us consensus wise, it sounds like startup of the night would be Applied Bioplastics. Is that right, guys?
Sounds like. And if I may, I would like also to add basically that there's the enzymes, Everalis. I think you're addressing a great point. Maybe specifically if you go more for microplastics, which is a huge issue, and you're the ones who can actually tackle that because it's too small to recycle it in any way. I think you have a great chance of winning because of the current public perception and anxiety around. So that is close to my heart. Also, it seems like you're a little bit more nascent, but I agree with all your comments, Matt.
Mm-hmm. No, I find them fascinating as well. I'd like to see it more as an IP play because we need to have enzymes. We need to be recycling the plastics, but being the executor on that seems a little bit more challenging. Let me bring Alex back. Alex with Applied Bioplastics. You wanna say anything, Alex? Do you have any last words? Alex, when he pitched me the first time, he told me that people tell him he's almost like a bit of a guru. He just seems to attract incredible people to him. And I was incredibly impressed by the team that they've built and his ability to pitch the company. Thanks, Alex. Any last words, so to speak?
Well, firstly, Matt, thank you for having us. Thank you to your sponsors. Thank you to the judges for coming on and asking great questions. Thank you to all the other startups who pitched today. And it's always great to see so many people working on such critical problems. So again, thank you guys for the time and effort you put into coming on today and for the effort you're putting into building your companies. There is no silver bullet to the climate problem. It's going to take all hands on deck, all the capital that's represented here, all the folks watching today that have capital. I'm so grateful that you guys are taking time out of your day to learn about what's out there in the market and plan to put your capital into things that are going to create the next generation or make it possible for us to have another generation as a species. So thank you again. If you would like to invest in Applied Bioplastics, you can reach out directly to me at alex@appliedbioplastics.com. And again, thanks so much for having us.
And thanks so much for pitching, Alex. Thanks for sharing, all of you startups. Thanks for tuning in, all of our viewers. Thanks to our awesome investor panelists. So Matt, Ben, where's the best place for people to find you, learn more, and possibly reach out?
Matt at anthro.ventures is the easiest way to get a hold of me. Twitter and all that stuff too, but email, I'm old, so email.
Well, I can echo that. Plenty of email though, but it allows you enough time to go through. So at benh@ogci.com. So Ben and then h@ogci.com is the best place.
And folks, you know where to find me. It's forward, the number 4, ward.vc. We're investing in companies that move the world forward, the top pre-seed and seed climate startups, including possibly some of the companies you've seen here. To learn more, forward.vc/syndicate. And this is all brought to you guys by Leva. Leva is the fastest, easiest way to set up an SPV. 5 minutes, you have a nice, easy digital SPV with 2 people or 20 million, 2,000 or 200,000 in funding. That's the paperwork, none of it. It all scales fast, easily. And just if you're a founder raising money, if you're trying to deploy capital into companies, it's a great way to do it. Forward.vc/Leva, LEVA, and tell them that Matt sent you. So they know you came from here. They'll hook you up with a special deal. Speaking of, we're always looking for great companies to pitch on the Startup Tank. So if you're a climate startup, you're doing big in the world, you're a little crazy, and you're solving a massive, massive problem the world doesn't know enough about, then we would love for you to reach out and apply to pitch. thestartuptank.com for more details. Submit your pitch, and hopefully we can get you on a session like this. Thank you all for tuning in. Now it's time to wrap this up. If you haven't subscribed, hit the subscribe bell on YouTube. You can subscribe to our newsletter on LinkedIn or at forward.vc/free, that's FREE, to download our 600 plus climate VC database with all the incubators, accelerators, VCs. You can filter and find your ideal investor to go fund your big business and your big dream. Forward.vc/free, that's FREE. And until next time, this has been another session of the Startup Tank. Thanks everybody for making this happen.